Is investing overwhelming? Do you not know what direction to turn? Do I sound like an infomercial? Then you're in the right place. I'm gonna try to fit a ton into this video, such as the concept of investing specifically in the stock market, because yes, there are other types of investing, and other resources to check out that are gonna help you as a beginner investor. So let's get it poppin'. To understand investing, you kind of have to first understand that money represents value. Like the dollar bill itself, the piece of paper is not worth anything, but what it represents is value. When we do things with our money, we are handing over that value in exchange for other value. For example, when we spend it, we're obviously handing over our value in exchange for something, some experience, some product, whatever. When we are saving our money, like holding it in a bank account, the bank isn't just storing our money for us for free. The value we get for storing it at that bank is a safe place to hold our money. The value they get is they're actually using that money to sell loans and financial products, just things that will make them more money. Now, when you invest your money, what you're doing is you are giving that value of your money and putting it into something that will make more money. Kind of similar to what the banks do. So most people assume that investing is purely the stock market, but investing is technically the concept of purchasing assets. Assets are essentially anything that can be used to make money. So with that, let's talk about stocks. Stocks are one way to invest, and what you're actually doing is investing in a company. Companies issue shares for part ownership in their company. They do this because they get money in exchange for those shares, and they can use that money to make the company grow further. This is why if you're invested in a company and they do really well and make a lot of money, you get a portion of that money, and that's why your stock goes up. So that's generally how it works. There's of course a lot of nuances. These shares are actually bought and sold in the secondary market, meaning you're actually buying from other people who are trying to sell their shares. There's a lot of nuances, so I'm not going to talk about it in this video, but just know that when you hear about brokers, exchanges, discount brokers, they're just intermediaries that help facilitate some of these exchanges that happen. I used to hate hearing people talk about investing and saying all these words that I didn't understand, and sometimes I'd either be too afraid to ask, or even if I asked about something, people wouldn't be able to explain it to me. Sorry about the noise. So I'm gonna try my best to make it so by the end of this video, you know more about investing than you did 2-3 minutes ago. For those new here, my name is Lisa and I help women of color build wealth, so make sure you follow. All right, let me stop waving these around and start using them. Most of us work jobs in order to make money. We get to choose what to do with that money, and each choice gives us something in return. We can save it, and that just delays the use for later. We can spend it, and we usually do that in exchange for goods and services to live life. When people say to invest, the purpose of this is so that your money can make more money. The reason it's so hard for a lot of people to understand investing is because when you save and spend, you can actually think of what's happening physically, like something that's tangible. Most investing, when we're talking about investing in the financial world, is about putting money into stuff that is not tangible. What I mean by that is, yeah, you can invest in real assets, like things that are physical, that you can actually touch, right? You can invest in homes, in property. You can invest in gold. You can invest in collectibles, like art and other things. But when people are talking about investing, a lot of the times they're talking about these things that you can't actually touch. Let's dig a little deeper into what assets are. You'll hear this term in business too, but for now, let's talk about personal assets. An asset is essentially anything you own that holds monetary value. A way to think about it is that it can be exchanged for cash, or cash itself is an asset. Real quick, something else that used to annoy me when I was trying to learn about the basics of investing. Sometimes if you Google shit, like what are the asset classes, you get all sorts of different answers. Some people say there's 9 asset classes, 5, 4, 3. All you gotta know is that people just categorize things in different ways. But for the most part, when we're talking about investing money, and we're talking about this in the financial world, you're putting money into a thing that is going to bring you money now or later. So remember, you can invest in real assets, things that you can actually touch. On the other side of things, there are intangible things you can invest in. If you hear the word securities or financial instruments or financial products, or there are other terms used, these are all assets. Now you might be wondering, where the hell does a stock fit in all of this? A stock, or a share, or equity, whatever you want to call it, is a type of security. To be more specific, it's an equity investment. Similarly, a bond is a security, but it is a debt investment. I ran out of time and didn't get into how you make money off these things, but make sure you follow for more on building wealth. If it sounds like people are speaking a whole different language when they're talking about stocks and IPOs, then this video is for you. And if this video doesn't make sense to you, click this comment and go to that video first, where I talk about investing in securities in general. In this video, let's talk about stocks, which are a type of security. Quick recap, you invest in assets to make money. Securities are a type of financial asset. Now, if you try to Google securities or like how many types of securities are there, you're gonna be met with different answers. And that's simply because, like what I was saying in the other video, people group them differently. Now, all you need to know is there are a lot of different types of securities and financial products out there, and they're bucketed in different ways. Today, let's talk about stocks, which is a security you've probably heard about. Stock is a type of equity investment that'll make sense in a second, and just know that sometimes these terms are used interchangeably. Conceptually, equity means ownership. This is a janky ass looking pizza, but basically what I'm trying to show here is that if you own one slice of the pizza, you have equity in the pizza. You own a piece of that pizza. So if you purchase stock at one of these companies, you technically own a piece of the company. There are only so many companies that actually have shares that you can buy, and it's determined by whether or not a company is public or private. Publicly traded companies have stocks that you can buy. Let's say I started a company and I called it Lisa Inc. Lisa's my name. If it were a private company, I get to make all the decisions and I have to fund everything. I could borrow money from a bank, I could use my own money, whatever. Let's say business is booming, but I want to take my company to the next level and I need money to do that. I would go through the process of an initial public offering, an IPO. I would be working with banks and other third parties might be in the mix. The point is to get investors' money to the company and issuing shares to those investors. This is called the primary market, and these investors are typically not new investors like you and me, but eventually they're gonna sell their shares to other people who want them in the secondary market. Let's say you copped yourself a $10 share of Lisa Inc. on the secondary market. In order for you to make money off of this, you need other people who are willing to pay more than $10 for it. Trading in the secondary market is all about supply and demand. So you don't necessarily need the company Lisa Inc. to do well. But the company doing well usually makes other people want to pay more for that share. There's a lot more to it, but I hope that helped explain stocks a little bit better. Make sure you follow for more on building wealth. I want to continue this Investing 101 basic concept series by talking about bonds and funds. TikTok won't let me be great yet because they won't give me the playlist feature, so if you want to see the previous videos, make sure to click on this comment. Part 1 was on investing in general and securities. Part 2 was on stocks. In this video, I want to talk through the concept of bonds, which are another security or financial product that you can invest in. In the future, I do plan to talk about how to actually invest and how to strategize making money from these things, but it's important to know the basics and how they work because everything else will make sense once you know these foundations. Quick recap, the whole reason you would invest in assets is to make money. Financial assets, unlike a house, which is a real asset, financial assets are more intangible things and they include securities. There are a lot of different financial products, aka securities, to choose from. Stocks and bonds are examples, and these securities all have differing amounts of risk and different ways to actually make money from them. Unlike stocks, which I talked about in the previous video, stocks are an equity investment. If you own a stock, you own a piece of a company. A bond, on the other hand, is a different type of investment. It's considered a debt investment. So when you buy a bond or you hold a bond, you own a bond, you don't technically own a piece of a company. Instead, you are lending them money. Let's say I have a company called Lisa LLC and I need money and I want to do this in the form of bonds. What I would do is I would hit up a bank and there'd be other people involved and we would talk about how we do a new issue of a bond. The goal of this will be to get these bonds out to investors and get that money to the company. The concept is kind of similar to an IPO in stock, but instead the process is different because we're talking about debt financing. Either way, this initial new issue has to deal with investors in the primary market. After that, investors can go ahead and take these bonds and try to sell them to other people and trade them in the secondary market. So you can make money off of trading bonds in the secondary market, but let's talk about making money through interest. When a company issues a bond in exchange for money, they're making a promise. These are made up numbers, but for example, what they might say is, look, give me $1,000 now. I'm going to pay you 5% every year, which is $50, but actually I want to pay you $25 twice a year instead of one payment of $50. I'm going to do this for 10 years, and on top of that, I'm going to give you back this $1,000 at the end of the 10 years. It's obviously more complicated than this, and we got to talk about the time value of money also, but that's just an example to understand it conceptually. Once again, I ran out of time, so I don't have time to talk about funds, so that'll be the next video. Follow for more on building wealth. What the hell does a brokerage do? That is a great question. Let's cover the concept of a broker, how it works in the stock market, which means I'm going to have to define what a broker is, a brokerage account, and a brokerage firm. And lastly, the role that it plays if you are interested in investing in the stock market. It's a lot to cover, but let's see if we can do it. Conceptually, a broker is an intermediary. This means a middleman between a buyer and a seller. So somebody wants to buy something, somebody wants to sell something. A broker is in the middle trying to facilitate that. It could either be an individual person or a company of people, and it works differently in real estate, in art dealings, and in the stock market. I'm going to assume that you know what a stock is, but let's do a quick refresher on the stock market so you understand why you would even need a broker to facilitate someone buying and selling stock. Let's say we have a company, a private company, so not a publicly traded company, called Lisa Inc. Lisa is me. I want to raise money for my company, so I want to sell shares of my company in exchange for money. What I would do is get a bank involved. The bank would give me money, then they'd take these shares, then they would sell the shares to investors. Keep in mind, it's more complicated than that. They have to hire third parties. There's so many people involved in order to make this happen. But this process only happens once when it IPOs, initial public offering. After this, investors own these shares, and now these are being traded on the secondary market. So if you had money and you wanted to buy stock from someone who owned it, you wouldn't go find someone who owned it. You would go to a broker. So technically and historically, brokers are actual people, like individual people. They have to hold licenses to do what they do. Nowadays, when people think of a brokerage or we say brokerage, a lot of times we're talking about like a brokerage firm, like a company. And that's because nowadays, a lot of companies have their own online platforms to facilitate this process where you don't actually have to interact with a real individual person. So let's look at a really basic overview of what happens if you wanted to buy a stock. Now keep in mind, there's a lot of areas that I'm not covering today because I just don't have time. Oh my God, I did not mean to erase that. So if you wanted to invest and buy stocks, you would pick a broker, you'd set up an account, you'd put money in that account, you would place an order, and then the broker would facilitate that order. So once again, this is super simplified. There's a lot of details that I didn't cover, but I just want you to understand the general concept. I hope that helped. Everyone else, make sure you follow, and let's keep talking about building wealth.